Welcome back to This Month in M&A. Today, we're going to discuss a ruling that involves the inbound transfer of IP. And here to talk with us about the ruling is Ben Chiaia. Now, Ben, before we get into the proposed transaction, we need to understand some background. So prior to going in for the ruling request, the taxpayer executed an outbound transfer of IP in a D reorganization. Now, Ben, this transaction is subject to Section 367D.
Correct, Jacob. Generally, under Section 367D, if a U.S. person transfers IP to a foreign corporation, the U.S. person receives deemed annual payments that are contingent upon the use or productivity of that IP. Also, the foreign transferee reduces its E&P for those deemed payments.
So this sets the stage. We have IP subject to Section 367D. The taxpayer is going in for a ruling request. Ben, what does the taxpayer propose to do?
In the proposed transaction, the taxpayer transferred the IP to the controlled corporation along with other assets that were previously held by the U.S. parent. Now, after these transfers, the stock of controlled is distributed back up the chain into the U.S. group in a series of tax-free distributions.
So the first thing we can see here is that a member left the consolidated group. Its assets are reincorporated in a new U.S. corporation, and that new U.S. corporation finds its way back into the consolidated group. Now, was there any concern that controlled was a successor to the target in that outbound de-reorganization?
There may have been some concerns, as the PLR includes a ruling on Section 1504A3, which generally prohibits a member or any successor to that member from rejoining a group after it's departed within a period of 5 years. The ruling concludes that controlled would not be prohibited from rejoining the consolidated group, but it's unclear if controlled was not a successor or if the service waived the application of this rule.
So the IP makes its way back into the consolidated group. Now, remember, this IP is subject to Section 367D, and the regulations have rules that apply to the transfer of that IP to a related party. Generally, the transferee is going to step into the shoes of the transferor for purposes of making the E&P adjustments that Ben mentioned. Now, Ben, how did the service apply the related party transfer rules in this fact pattern?
Interestingly, the regulations do not provide guidance that distinguish between a transfer of the IP to a related foreign person or domestic person. In the PLR, the deemed payments continued even though the IP was transferred to a U.S. corporation that was distributed back into the U.S. group.
So, despite the ambiguity in the regulations, these rules apply to domestic transferees. Now, the next thing we see here is that these deemed payments are between members of a consolidated group. Parent has an intercompany item, and controlled has a corresponding item. How did the service apply the intercompany transaction rules?
Now, under the consolidated return rules, the deemed payment may be excluded if the corresponding item is permanently disallowed. But for the E&P reduction, the payor is not allowed any adjustments to E&P, basis, or gross income. The service apparently viewed the application of this rule as a permanently disallowed deduction and excluded the deemed payment from income.
So, how did the service handle the collateral consequences that stem from the application of this offset rule?
The service ruled that the deemed payment would not result in E&P or basis adjustments that would have otherwise been required under the consolidated return rules.
So, to recap, the consolidated group does not have any income, and the basis and E&P adjustments are eliminated. Ben, did the service effectively shut off 367D?
Yeah, but as the PLR continues these payments, it's unclear how states that don't conform to the consolidated return regulations will treat the transaction.
Excellent. Ben, thanks so much for stopping by. As you can see, this ruling sheds some light on the application of the related party transfer rules in the Section 367D regulations. For additional information on this ruling and this month's other guidance, please refer to the newsletter or contact your local PwC professional or any member of the M&A team.